Hello everyone and welcome back to my YouTube channel. My name is Matt Branch and I'm the proud founder of M Branch Financial, and I'm an insurance broker here in Kingsville, Ontario, but I service parents, Canadians, business owners all across the country. So today we're talking about a very specific thing that I'm very passionate about and that has been growing in popularity, and that is life insurance for kids. But I am hoping that you take some value out of this video and start learning about the amazing thing they all have. And what is that thing? It's called time. They have time on their side. And what that means is they have the power of compounding on their side. What's the thing that all millionaires and billionaires wish they can get back? Time. They have everything, but they don't have one thing that your kids have, and that is time. So today we're going to be talking about the specific advantages that kids could have when owning a high cash value life insurance policy on their lives that doesn't require a lot of capital to start, and something that you're going to be able to gift them down the road in the future. Today we're going to be diving into 10 things that you guys can take away from high cash value for kids, life insurance policies for your children. So starting out with number one, we have building financial security. So with these life insurance policies, it allows them to grow a growing cash value that grows tax advantaged. So it will grow tax free inside the policy, provide an asset that they can use, leverage down the road, no matter what the financial markets are doing. The money grows no matter what the stock market's doing. So having that stability for them that they can leverage, in their adolescence, maybe getting that first car, that first home, it gives them financial security, because you and I both know the markets are doing whatever they want right now. And to give them a peace of mind down the road when they're making these first buying decisions is really awesome. This is my point number two. Another thing that most people don't realize with whole life insurance is it locks in the premium amount like they're paying 5-year-old dollars for the rest of their life. So if you are familiar with life insurance, you know that as soon as your policy renews, after 10 or 20 years, maybe even 30, your premiums shoot through the roof. With a whole life insurance policy, you're locking in those 5-year-old dollars, those 3-year-old dollars, maybe even all the way up to 16-year-old dollar premiums for the rest of their life. So they can be putting in more money rather than paying for the cost of high premiums of these whole life insurance policies. So the younger the child, the cheaper the premiums, and it's locked in for life. Insurability is guaranteed even if they develop health conditions. So maybe you've been denied insurance. Well, your kid won't have to go through that because now he's locked in this premium. Even if he decides to stop funding the policy, the cash value can pay for the cost of insurance. Number three, we have tax advantage growth and compound interest. So remember when I was talking about that thing they have? It's called time. The cash value grows tax-free inside the policy under the Canadian tax law, uses the power of compound interest that's not correlated to the stock market, and so this will grow over decades of their life. Number four is future to funds, no strings attached. So the cash value can be used for education, buying that first home, starting a business, retirement, so on and so forth. Whatever they can think of, they have funds they can now draw on to now build wealth smarter than ever. Unlike an RESP, a registered education savings plan, there's no penalties for drawing these funds out. There's no restrictions for drawing these funds early. So even if you need access to the money while you're growing their capital for them, in their early years of life, you can absolutely take from these funds, which is an amazing feature of these policies. It's something that I have against RESPs personally. Number five, adding on to these RSP talks, it's an alternative RESP and RRSP plan. Unlike RESPs, there's no risk of losing government grants if the child doesn't pursue post-secondary education. And unlike RRSPs, registered retirement savings plans, there's no mandatory withdrawals at a certain age and no tax penalties for accessing this money, which is amazing for them. Number six, we have creditor protected savings. So unlike bank accounts, the cash value is protected from creditors, obviously depending on your provincial laws. Unlike your bank account, your policy is actually protected from creditors. So if someone tries to sue them, in the later years of life, I'm not saying a kid's going to get sued, talking about when they're 25, 30, 35, 40. Maybe they have rental properties. Maybe someone slips. Their money is protected within the whole life insurance policy. So no one can come after them for that money, which is an amazing feature of the policy. And this is ideal if they become business owners, entrepreneurs, investors, right? Where there's a lot of moving parts and maybe things happen that people will come and try to attack them for whatever reason, financially, obviously. Number 7 is they can actually leverage the infinite banking strategy in the later years of their life. So they can leverage collateralized loans against the cash value. And this is kind of what I was already talking about. And it teaches your children how to use leveraged investing correctly. Obviously, we don't always want to be leveraged when we're investing, and that means borrowing money to make a return. Infinite banking is a very specific concept because the loans are actually in your full control. You determine how much money you pay per month, or if you want to pay that month at all. Unlike going to the bank, you have to go through credit, you have to get a credit check, and they determine the loan terms. So that's not going to happen with using the infinite banking concept. Number 8 is you have a permanent life insurance contract. So life insurance is guaranteed no matter what happens to their health. It provides a death benefit that can support their family when they're starting one, and they're going to have that for the rest of their life. Number 9, I think, is really awesome for some of your parents out there, is you're giving them a gift when they turn 18. If you would like, you can now transfer this asset over into their possession, and now they can, take the role on and have financial responsibility from a young age. And if you are doing it right, it's a great teaching point to teach them financial education, financial responsibility for this asset that they now can use to build more wealth for themselves. And number 10 is protecting against the unexpected. If a child develops a critical illness, having insurance in place provides financial peace of mind. It provides them life insurance, so even if they do get sick, no one can take this contract away from them. It's theirs for the rest of their life. And then on top of that, there's a lot of policies out there. There's a lot of different companies that offer riders on top of these policies where you can actually secure critical illness for an extremely cost-effective price because they're so young, and even disability insurance. So you can give them this for the protection of, when they're starting to get into the workforce, own a business. You can give them that security that if anything were to happen, like, cancer or, unexpected accident that prevents them from working, well, now they'll have this policy, which then is very cheap because they've locked in these premiums and will provide cash flow when they need it most. So those are my 10 pros to owning a life insurance policy for your kids at a young age. Now, this isn't for every parent out there, and this is for a parent that wants to start implementing smarter investment and saving strategies for their kids. If you're interested in this, I'd be more than happy to discuss the specifics. Obviously, it's different for each person and each family. There's no starting point to how much this costs. It really depends on your budget and what we're willing to work with and breaking down the numbers. So I appreciate you watching this video. If you got value out of it, please like and share this video. If you're looking for more wealth building tips, you can subscribe to this YouTube channel, and I'm always here with a phone call away, or you can send me an email, and even follow me on other social medias because I post, short little updates, little tips and tricks all over the place. TikTok, Facebook, Instagram, you name it, I'm on it. So I really appreciate you watching the video, and I hope you have a fantastic day.